All right, so let's break down your August financials like we do here at Simple Numbers. So, as a reminder, there are five simple numbers that we want you to be tracking, and we will track for you as part of our bookkeeping service every single month, quarter, and year. These are the numbers you've got to be following a model around, right? So, you've got to be tracking them to know if you're on or off track. Each month, we're going to look at each number, each of the five, and tell you whether you're high, low, and then what you might be able to do about it if it's off. So, as a reminder, the five simple numbers are: number one, total income. How much did you bring in? Number two, total cost of sale. How much did you pay out to your agents and your broker? Number three, your gross margin. How much do you have left after you paid your agents and your broker? Number four, expenses. How much did you spend to run the business? And then number five, what did you have left at the end of the day in net profit and owner pay? So those are the five simple numbers. We got to track them every month. Let's start with looking at your total income. You had $192,000 of total income. So that's a great month. Your total cost of sale, your total cost of sale was $71,000. So that's 37%. I will tell you that's a little bit high when you are heavy in production. So if you were completely out of production, that would be on track, 30 to 35%. But when you're in production and you're generating a lot of the revenue yourself, we only want you to be paying out 20 to 25% of the total revenue to your agents and broker. So you're a little high on that one. I'll talk about what you might be able to do to correct that issue. Number three is your gross margin or gross profit. Now, that's 121,000, and that's 63% of your total income. So you kept 63% on the dollar after paying agents and broker. It's not bad, but for the model that you want to be running, it's a little low. We want you to be at 75 to 80% when you're heavy in production, at least. So again, we'll talk about that as to what you can do to correct that. Number four, let's look at expenses. You're doing really great with expenses. So that's awesome. To be able to generate this much revenue and only spend this much money to do it is pretty awesome. So your total expenses were $33,691. That's 17.5%. So that's awesome. The goal is right around 30%. And so you did a great job there keeping your expenses low. Number five is your net profit and owner pay. That's $85,000 last month that you brought in. First of all, awesome. To have that much revenue in a month for a business is unbelievable. It's awesome. So that's 44%. It is slightly low. The goal is 45 to 50%, as close to 50% as possible, if not higher, when you, the owner, are heavy in production. If you were completely out of production, you'd be killing it at this amount of net profit. But because you're generating a good amount of the revenue yourself and you're not paying out any of that to another agent, then we want your net profit to be higher. So that one day when you do step out of production, you still have a healthy profit. So what can you do about the issue that you're a little bit high on total cost of sale? Here's what we can do. I looked at your cost of sale in detail. And so what I did was, what's your buyer income and your buyer cost of sale? And that is where we have a little bit of an issue. You're at 40 to 45% total cost of sale on the buy side. And that's probably where it's skewing your numbers a little bit. And we need to correct that. Here's your options, at least the ones we think are probably the best options. Number one, correct your buyer splits. That's hard to do, I know. Maybe you don't do it on existing agents, but anybody new that comes in, you tweak them a little bit so that it changes your numbers and makes them follow the model. You could change your splits, or you could even just take 5% off the top of every deal as a broker fee or a team fee or whatever you want to call it, which would then correct your buyer splits even if you didn't actually change the splits themselves. We did that for years, took 5% off the top. The second thing you could do is focus on team-generated leads versus just agent SOI leads. Maybe if we broke down your buyer deals from this last month, a lot of your agents did sphere of influence deals, which isn't bad, But if there's too much focus on that and not enough focus on or equal focus on team generated leads, then it can shift our numbers and put them out of whack, which might keep you in production longer. The third thing we could do is increase your admin fee, both the dollar amount you're getting or the percentage of times you're getting it with clients. And I'm happy to go into detail with you. We did that. We charged $7.95, got it 95% of the time. So I'm happy to go to a training with you on that if it's helpful. But those are the things I think you could do. If you did any one or all of those things, it would shift your cost of sale down and would help shift these numbers a little bit, which might make it easier when you're ready to step out of production and still maintain a very healthy profit. So hope that's helpful. Let me know if you have any questions or you want to jump on a call to go into any further detail. Take care.